Carter also thinks moves this week will look more like a bull trap than a breakout if you haven't figured that out already. Why don't you go over to the telestrator, to the plasma,
find out,
and break it all down for us.
I have no idea.
He is the chart master.
So it's when there's a lot of bullishness and it's misplaced. It looks optically like this. Here we have, of course, the market going into what was a record RSI reading, never recorded in the MSCI All-Country World Index, and equally so for the S&P 500 on a weekly basis. And then, of course, this epic plunge of 2 weeks, Friday, 26th of January, to Friday, February 9th. And then we rally all the way back, and this is the bull trap. Let's take a look. Move the lines forward. Consensus is you're going to break out, and that's exactly what happens. It breaks out. So is it a bull trap or a breakout? The problem with this kind of thing is, from chartists like myself to just the money flow to the algorithms, seeing that move, it draws people in. It forces shorts to cover. And then, of course, we know it turns out to be a horrendous time to have bought. So that once you take a hit like this, you leave all this money trapped above. People who bought in the past 3 to 5 months who now are underwater and would love, in principle, to get their money back. We're basically, we basically closed the doors into something of a murder that just took place. It's not good. Here's another way to look at it. This is the S&P equal weight, and this is the key. And Guy, you and I have talked about this. The S&P equal weight was a perfect double top. It was only the S&P itself with Amazon and Apple that made it go higher. We never broke out. That's the ultimate trap. And then, of course, we've broken down below this line. None of this is a particularly good setup. Here it is. Here's the chart of the S&P. Where could we go? Well, you can go anywhere the imagination will allow. Do we hold this support? No. Put in another line. Where can we go? Frankly, we've been in this range. We got a little bit above. I think there's every possibility that we come back to the lows of February. And that would simply be, it sounds like a lot, 14% decline. That is garden variety, run-of-the-mill. Dip, sell-off, correction, pullback, decline, whatever you want to call it. It used to happen all the time in markets. Now it's verboten, not allowed. But it'll be allowed soon enough.
All right, come on back over this way.
Yes.
Let's kick this around.
I mean,
he's definitely invited back. I mean, it's not even a question. You're going to tell us we're going to go down 14% more. You're definitely invited back.
14%.
We may kick you off the desk.
So another 7%, though.
So there's 7% would be perfectly normal. That would just go back to where we were in February. And is that a bad thing? I mean, why is that so bad?
No, people say these are healthy corrections. No one's suggesting that it is. I'm just curious as to whether it's, quote unquote, justified or if the market and investors overreacted this week.
I think it's 100%. Why wouldn't it? Well, what's not justified about it? I mean, I think it's justified. If you look at the pre-announcement,
I don't know.
It's justified. Like airlines have been rolling over for months.
Right.
Autos have been rolling over
home builders.
Housing has been rolling over for months. Semis. But so why isn't the broader market can't roll over on the back of those things?
Karen, you want to answer that?
Well, Delta.
Karen doesn't sound as negative as you guys. That's why I asked her to respond.
Not as negative, and anything could happen. Of course, could it trade down another 7%? Absolutely, but I think that the pullback that we've had has created a lot of opportunities, and I will guarantee I will not pick the bottom for sure, but there are some things that are good to own here.
Well, so Carter's given this 14% level. Just remember that the rest of the world has actually sold off more than that already.
That's right.
So you're in a place where the dynamic here is at least looking around the world. And again, China had some better numbers last night. Guess what? It's probably front running on exports to get ahead of this 25% that's coming year end. So I think Guy is bringing up a point that, look, if you can find plenty of reasons to if the tone of the market was very bearish for the last 9 months, you could be very bearish right now. And I think, Scott, you're right to say, hey, well, hold on a second. People might have just overreacted. We've seen this happen 4 or 5 times. I think it will ultimately come back to valuations, and I think the Fed has made it very clear what they're doing, despite what may be swirling around them in terms of pressure. They have to keep getting to a neutral rate. They're not even there yet. And the bottom line is you get multiple contraction when the Fed's in play. And we've priced in a lot of, I think we got the sugar high from the tax cut. I think on a price to sales basis, it's very expensive right now.